It is not often that a stock is an obvious buy at a great price. But today we're going to talk about one that definitely is. Today we're talking about Enbridge stock, one of the best plays right now in the Canadian markets and in worldwide markets in general. This is an incredibly safe stock that has a combination of features that make it one of the best investment opportunities of 2025. It has consistent growth. It has a high dividend yield, and it has some fantastic future potential. Today, we're going to talk about all three. We're going to run through some numbers, and we're going to talk about why I think this is a great buy still in 2025, why I think it's uniquely positioned to benefit from the results of the current sort of conversation about Canadian oil, and why I think it is a great place to park some money if you are worried about the industry, about the Canadian markets, or just in general. So let's start by looking at some numbers. I've got FinChat up on the screen right here. It's a fantastic service. I recommend you check them out. And we're going to go through some very basic numbers. Right now, Enbridge has a market cap of 130 billion Canadian dollars, which is obviously one of the largest companies in Canada. It sits at a trailing 12-month PE of 25 with a next 12-month PE of 19. This is obviously a fairly high number, but it's based on consistency and it's based on moat. Enbridge has a fantastic moat. They own products that cannot be replaced in any reasonable time. And of course, they pay out a great dividend and have grown. It's similar in some ways to Canadian Rail. I would say that I would compare the P ratios more to something like a Canadian National or Canadian Pacific than I would to some other competitors in the oil and gas space, because being a midstream giant like this means that a lot of the moat is going to be baked into the stock price. If you look at some of the growth numbers, they're pretty consistent. Over the last 5 years, we're growing at about 1% a year. In revenues, last 3 years have been a little bit faster. Diluted EPS is down a little bit over the last 5 years. But if you look to the next couple of years, they're expecting EPS to jump up 7.8%, with EBITDA jumping about 6%. So essentially, they're growing steadily. EPS is going to fluctuate based on expenditures, based on the price they can get, based on all sorts of factors, but they're growing pretty steady. The best part about this stock, of course, is the dividend. If you're looking at the dividend yield, we're looking at 6.3% with a payout ratio that's actually pretty dang high, but we're seeing some solid dividend growth. And of course, this company has managed to not cut their dividend basically ever in the functional time life of anybody's portfolio. So like 30 years, they have not cut their dividend. It has grown, which has made it one of the very best dividend growth stocks. And it is a staple in so many Canadian investors' portfolios. Now, one of the things that I really want to talk about with Enbridge is why it is such a great buy right now. You might be looking at all of those metrics and thinking to yourself, why is this guy recommending that I invest in a company with minimal revenue growth, with a payout ratio on their dividend over 100%, with negative EPS growth? How is this guy saying that they have some real future potential? And why is he recommending that I buy them at a time when so many other companies are at discounts? Well, I think it comes down to a couple key factors. And the first is stability. If we look at the price, and let me just jump into a 3-month time span here. If we look at the price over the last 3 months, functionally, it hasn't moved. If you consider how much volatility is in the markets, a $2 difference between the start of this 3-month period and the end is nothing. We have seen the S&P 500 jump 10% in a day over the last 3 months, and Enbridge is steady. We also, of course, have its business model to think of. The infrastructure around a company like this makes it so hard for it to be replaced, for it to have its business model severely compromised, and the kind of contracts it runs on means that it is probably going to weather any storm. But the biggest thing, the biggest reason why I think Enbridge is such a great opportunity right now is future growth. And I think it's growth that we have not priced in at all. The Canadian oil and gas space is poised for a massive boom in investment, mainly because shale oil is hitting its twilight and Canadian oil and gas has been starved of capital and starved of export capacity for at least a decade. This means that there's a lot of money down in the States looking for an opportunity to buy into Canada. We've seen massive industry experts talking about this week, and they expect there to be significant investments in Canadian oil and gas this year, meaning that while maybe we don't see huge booms in production, we are going to see just the beginning of a bull cycle in the Canadian oil and gas space, with more people looking to Canada to replace shale oil production over the next 10 years. Well, now think about how Enbridge reacts to this kind of news. They've been able to steadily grow over the long run, consistently pay out huge dividends, and basically just generate cash. And now there is potential for a huge boom in oil production in Canada, and that oil needs to go somewhere. Now, yes, there are competitors in this space, but this is a $130 billion company. They will, not may, will get a piece of the action no matter who wins in the production space. That means for a cautious investor, for an investor looking for a safe, stable play at a time when stability is at a huge premium, Enbridge not only represents one of the best ways to protect your money, but also gives you access to a huge potential boom for basically free. You are paying for a stable, dividend-paying, slow growth giant. And just on the side, they're throwing in the potential to capitalize on a massive boom in Canadian oil production at a time when geopolitics means Canadian oil might be one of the few safe sources on Earth. Now, that's just a couple of reasons why Enbridge is such a great stock to buy in 2025. I strongly recommend, if you aren't invested in this company, you at least research it, because it makes a lot of sense in an RRSP, in a TFSA, in one of those long-term, slow growth portfolios that you just want to keep growing safely forever. This makes a lot of sense for me. That's why it's a big part of my portfolio. And thank you for making it this far in the video. If you watch this far, it makes a huge difference. If you could like the video, subscribe to the channel. We're on our way to 1,000 subscribers, and your support would make a huge difference for us. With that being said, I hope I see you in the next video.